Mike Briggs is our cattle market analyst this week. To describe the recent price movements in cattle markets as a rally seems almost understated. The June live cattle contract increased nearly 12% during April and closed higher than the previous day on 16 of the month's 19 sessions. And the first 4 days of May saw the contract soar another $10.50. This comes as the USDA's latest projection 2.5 weeks ago showed farmers and ranchers would produce 5% more beef in 2017 than they did a year ago. We talked with Mike Wednesday morning and began by asking about the run-up in market prices.
It's a lot of fun, man. This has gone way past anybody's expectations. I was one of the more bullish guys out there. This thing's gone 15 bucks past anything I've could have ever thought of, but it's one of those things where a lot of things came together at the right time, and it's been very, very good for the cattle producer.
Dissect what's led up to this rally.
15% increase in exports, which I'm not smart enough to put a number to that, but it's worth a lot. Domestic demand has come around. They finally lowered all the complaining that you've seen me and other producers do for the last year. They finally lowered prices in the store, and demand came screaming back because people want to eat beef, and that's great. So you've seen that come together. Plus you've seen, and what I think is probably one of the biggest things from an overall standpoint, is you've had an overall bearish opinion in the board as far as the Board of Trade has, and so has made a certain amount of fear out in the country. And so you've had the board price much lower than cash. So anytime you have cash over the board, there's a huge incentive for us producers to move cattle quickly. We've moved cattle very quickly to the point where we're selling them 40 pounds a head lighter than last year. So last week, in fact, we processed 3% more cattle than the previous year and only produced 0.5% more beef. So we've been able to shove a lot of product through this thing, keep our weights down, and we're very current in the feed yards, and that puts us in a really good situation.
And the Packers been able to handle that much supply?
To this point, the Packers been able to handle this much supply. One of the numbers is out there is the max they think they can process right now is 625,000 head a week. We did 624 last week, so allegedly we're there. I don't think we're going to process that much going forward because they're not making the kind of money they were making, and they don't like that. But we're kind of at our max slaughter capacity, so we're shoving a lot of beef in the market, but yet since cattle weights are lighter, we don't have the tonnage there that we could have, and that's what's helping us out.
Slaughter weight's down 20 pounds an animal in March. You would expect April would do the same. Last year cattle were very heavy, but how many days in the feedlot difference are we talking here?
A lot of people like to brag or talk about how far out front they're selling their cattle. I had cattle on the show list last week that I couldn't even get a bid on unless I wanted to sell them at a discount because they didn't have enough finish on them. Everybody's very current. I would say we're 2 to 3 weeks ahead. Some people would like to say we're 30. I can't market cattle that are 30 months ahead, but we're definitely ahead of schedule. Now, the interesting thing, the cattle that are contracted so that they're priced already at a much dramatically lower price than what cash is today, you're going to go ahead and feed those out to their end point because you need the pounds to make up the money. But right now, everything's kind of going our way.
Total game changer for supply in summer, right?
Oh man, we had a tsunami of cattle coming at us, and we've pulled a lot of those cattle ahead. And it's not just the fact that we pulled those cattle ahead, we're putting less pounds of beef in the market. You saw cold storage be down. We're drawing out our cold storage stocks, and we're putting less beef on the market than was anticipated. And that's just going to help us down the road. Now, I still think we get into the end of summer, and I still don't like this thing. Now, are we going down to 85 cents? No. But you're probably going back under $1.10, maybe down to $1.05. And if you're buying $1.10, $1.15 break evens, that doesn't work very good. So you have to be careful.
Because the reason you think that is because?
There's just too many cattle coming at the market. If you looked at December and January placements, you have huge numbers coming at you. Those cattle go right into that July-August time frame. That's always a poor demand time frame on top of that. And somewhere here, the big incentive, as I said earlier, the basis where cash is over the board, that's going to flip. You're not going to have the incentive to market those cattle. We get a little bit behind the 8 ball, and as we typically do, we just make them bigger. So I'm not saying it's going to happen, but the potential is there for it to happen.
Give me an idea of where margins are at in the feedlot.
Margins are pretty outstanding right now. If you didn't do any risk management at all, you're probably making $500 or $600 a head, which is kind of the equivalent to what you were losing last fall. So it's kind of nice to get that back. The probably unfortunate thing for a lot of producers, the banker was making some marketing decisions for you last year, and a lot of cattle are hedged because producers needed to make money. And so I don't know what percent of producers are really taking part in this. Even us, to some extent, we priced some cattle early to make sure we had some margin made. Now we've been able to catch in on some of this at the end. I don't know anybody that's gotten all of it because nobody saw this coming. I don't care who you are, but it is a good time, and we needed it as an industry. We've lost a lot of equity.
We talked long term, more short term. Where do you think the markets go?
I think we're pretty good here. You know, we're always good into Memorial Day, and then it starts to stumble, and I really don't think there's going to be a lot of difference in that. You're going to start coming into more supply of cattle after Memorial Day, but I think we're good here into Memorial Day demand, and then the market could stumble a little bit, but the market could stay right where it is for 2 or 3 more weeks, but at some point it's going to erode away. It always does. You're going to have more supply of cattle. This isn't going to stay here forever, but I think we're good for a couple weeks yet.